Hi, everyone. It's Christine Kopr here with your November market update. October numbers are in, and we're going to take a look and see how the Vancouver real estate market is doing. Our key market drivers, consumer confidence is definitely decreasing. The good news is there's bad news. There's been more job losses, inflation is slowing, and a couple other drivers are interest rates. Now, we had two holds, October and September, and December 6th is the next rate announcement. However, the bond market has eased off, and because it went crazy in October, and it's decreased a little bit. So we're actually starting to see a little bit of a decrease on the fixed interest rates out there. And inventory, again, increasing, but still at historic lows. So here you can see post-pandemic employment, Canada versus BC, starting to trickle off a little bit in BC. The unemployment rate overall for all of Canada and BC, again, BC being the yellow line, for all of Canada, which is what the Bank of Canada looks like, is creeping up. So it's positive news that people are losing their jobs, so to speak, with respect to increasing the interest rates, and BC is hanging out, but kind of on that trend. And it's predicted that we're actually going to be in a technical recession with the way that the economy was between August and September. They're predicting that we're probably going to have 0 to negative growth. And if we see that, then we're going to have enough quarters of no growth or negative growth to be in a technical recession. So isn't that interesting? The recession that the government's looking for has probably arrived. Waiting for those numbers, but it sure feels like it on the street. Mortgage rates, what's happened since 2020 and where they shot up to, absolutely incredible. Here you can see the bond yield over 4%. Now this is a little bit, just a slightly old. However, here's your bond yield now, 3.8%. You can see October 2023, we're over almost 4.4%, and we're down to 3.8 or 3.9 for the bond yield there. So therefore, once the big banks are seeing interest rates hang out in this level, the bond rate impacts your fixed term mortgages. They actually start passing on that savings on to the end consumer. And we are starting to see that. So let's just see what happens here. If the bond market starts to think there really is a greater recession coming, then you might start to see the fixed rate interest rates decrease more meaningfully. But at this point, these days, every little bit counts. Even if it's only 10 basis points, it makes a difference. I'm Christine Kopr with Sotheby's Realty in Vancouver, BC. I love to help all of you. Please send your questions along, and I hope you found this valuable. Remember, we've had massive changes to zoning. There's been new Airbnb rules. There's the underutilized housing tax. Please check out the other videos to get the details. And of course, please send along any questions or feedback that you may have. And with that, make it a great day, and I look forward to connecting with you soon.